Bristol Myers Squibb stock, ticker symbol BMI, reported earnings on the 6th of February, where they beat on both the EPS and revenue. However, the stock went down a decent 3 to 5% as a result, so it seems that people weren't liking these results too much. And if we zoom out a little bit, we can clearly see that BMI was actually doing a pretty amazing job in the recent months, where they increased a whopping 40%. And one of the main reasons why investors seem to like BMI stock is obviously that amazing dividend, hovering at 4.4% dividend yield as of recording this video. While payout ratio is off the charts with 212%. So let's see what happened there. The best way to understand what happened with the company and its dividend is by checking the earnings report that just came out last week. Starting with the revenue, we see an 8% increase year over year. And in total, revenue was reported at 12.3 billion. And the interesting part is that BMI classifies their portfolio into legacy and growth portfolio. The growth segment increased 21% year over year, which is pretty impressive. For the full year of 2025, BMI expects to deliver 45.5 billion in revenue, which is actually lower versus their 2024 result. So basically they expect revenue to come down a little bit. EPS is expected to be in a range of $6.55 to $6.85. And what I think is really interesting here is the fact that BMI plans to save 2 billion in cost by 2027, of which 1 billion is achieved in 2025. And when we take the overall full year performance, we see that gross margin was reported at 71%. But in the fourth quarter it was much lower at 61%, something to keep our eye on. And looking at the EPS, we see that for the full year this was reported much lower due to the acquisitions of EPR and D. And that the full year of 2025 is expected to be a little higher than the 2024 EPS. So that's actually looking pretty good. Looking at cash and debt, we see that as of right now, BMI has 11.2 billion in cash and a shy 50 billion in debt. In 2024 they paid down 6 billion of their debt, and they plan to pay down another 10 billion by the end of the first half of 2026. So this is looking really good to me. Taking a final look at the last 2025 full year guidance slide, we see that it is expected that margins will increase again to 72%, so this comforts me a lot. They also expect to see a continuous strength in the growth portfolio, but a 18 to 20% decline in the legacy portfolio. So that's where the drop in revenue is coming from, something to anticipate on. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. BMY stock is a 112 billion market cap company. PE ratio is at 14.3, indicating they could be undervalued right now. Later in this video I will show you my 3 price targets for BMI stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 45 billion, and in this graph we see that revenue went up in the long run. However, it goes up and down a lot, and it is also expected to see another decline in 2025. Margins are going up and down over a longer period of time, and to be honest, both the operating margin and net margin are not looking any good. But keep in mind that numbers are expected to go up again after 2024 being impacted by acquisitions. EPS is looking pretty similar to the revenue and the margin, and basically tells the same story. Analysis expect that EPS will go back to $7, something that we also saw in the earnings presentation guidance. From there, analysis expect to see a decline in the following years. For the revenue analysis, expect revenue to decrease over the coming years, which is really disappointing. Also something that we saw in the guidance slide. Return on assets is sitting at 5%, which is a decent number, and not the 7.6% negative we see here. Return on equity doesn't look good at all, but the most important number, return on invested capital, is sitting at 10%, which is pretty nice, especially since it is higher versus the 5-year average. Current ratio is at 1.24, which is a great number, and nothing really special to mention here, to be honest. And right now, BMY has 11.2 billion in cash and a shy 50 billion in debt. And with the plan to heavily decrease their debt levels, I'm feeling very confident about the future. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, at a somewhat of a decent pace. Of course, we also see the impact during the lockdown periods. To me, this looks really good. Shares outstanding have increased a lot in the past decade. However, most recently they started to buy back shares, which is the positive thing here. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 4.4%, which is a great number. Annual payout is at $2.48, and payout ratio is a bit diluting here, because of the impact of acquisitions on the EPS. If we take the full year expected EPS for 2025, which is $6.55 on the lower side, we have a payout ratio of 38%, which is looking great to me. The 5-year growth rate is at 7.5%, which is a decent number. They have increased the dividend for 8 years in a row now, which is also really nice. And if you take a look at these numbers, the dividends paid since 2014, you see that BMY did increase the dividends at a slow pace. However, over a longer period of time, this really adds up. In this graph, we see the expected dividends in 2025 and 2026 and 2027. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to increase at the same rate as the past couple of years. And overall, these dividends look really good to me, but how about the historical returns? I decided to compare BMY stock with the overall market, in this case the S&P 500. On the 5-year chart we see that BMY had a much lower return versus the S&P 500. As a matter of fact, BMY only returned 1.6%, and this is including dividends. The S&P 500 is sitting at 96%. On the 1-year chart things look pretty interesting. BMY is actually not doing that bad, with a shy 20% return, while the S&P 500 is sitting at 22%. On the 6-month chart, BMY managed to beat the S&P 500, which is pretty impressive if you ask me. But on the 1-month chart we see that the S&P 500 again was the better choice here. Bottom line, BMY was beaten in the long run, and also most recently they were underperforming the S&P 500. But it has to be said that there was some momentum. So could this be the perfect time to buy BMY stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 4, 5 and 6%. For the free cash flow margin, I'm putting in 27, 29 and 31. For the PE ratio, I'm putting in 6, 7 and 8. For the price to free cash flow, I'm putting in similar numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, BMY stock is at $55. I hit analyze, and we see a few green numbers. And since the PE ratio is messed up in this tool, I'm only focusing on the discounted cash flow value. We have a low price target of $50, we have a mid price target of $63, and we have a high price target of $81. To me, the mid price target is the most justified here, indicating this stock is kinda undervalued, but only with a slim margin. And also expecting to see some growth in revenue and margins as an assumption. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on BMY stock is that I really like the company. Most fundamentals look pretty decent and they were impacted a lot by the acquisitions in 2024. Of course, there are some concerns with the future growth and margins, but most of the things I mentioned before can be fixed by the management in my opinion. They did some acquisitions, which is really great, and also they expand their new product line, which is also really interesting. From a dividend point of view, things look really exciting, and this is what most investors are seeking for, I guess, when it comes to buying this stock. From a value point of view, things also look pretty decent. It is not massively undervalued, but I think there is some potential, especially since they are hammered down a lot in the past couple of years. The company has a really good chance of proving themselves this year. I expect in the upcoming earnings to see some disappointing results, which can be great, since this will push down the stock down even more. For now, I'm waiting a little longer to see what is going to happen to the stock price, and the next earnings are again really interesting. And remember to always do your own research and never fully trust what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.